Hey, this is Chris the Mortgage Pro. In this video, we're comparing conventional loans to FHA loans to VA loans. Which one's the best one? Which one's right for you? You know, so many consumers are curious. Which loan is best for me? We really don't know. The average consumer doesn't know because there's so many variables. But today, I want to help you figure out which one is going to benefit you and your family the most for your short-term and or long-term goals, because it's different for everybody. Now, there are advantages to each one of these loans. So some have lower interest rates, some have lower fees. There's all kinds of different things to think about. So really, you need an experienced and licensed loan officer to help you evaluate this. In many cases, this is going to be really clear. It's going to be so obvious. And in some cases, it's not going to be so clear. Going to have to ask you a couple of questions. You're going to have to be thinking about a few different things. What's my future look like? How long is a big and important factor on how long am I going to keep this house? Now, most people have a tendency to just look at one thing, the payment. Which is cheaper? Well, it's understandable when you're buying a house, you're saying, hey, which payment is cheaper? But again, how long are you going to be in that house? Is there PMI? Will the PMI disappear? When will it disappear? If the PMI is going to disappear in 5 years, but I'm going to be here in 20 years, maybe this other loan is better long term. So we have to look at these things as a whole. Now, people ask all the time, what's today's interest rate? It's impossible to answer that question because your finances and every person's finances are as different as fingerprints. You may have an 800 FICO score. Your next door neighbor who wants to use the same type of loan may have a 600 FICO score. Obviously, the interest rate's going to be different. You may have $50,000 saved. And I know some of you are saying, yeah, if I had $50,000. Well, you may have $50,000 and your next door neighbor may have $10,000. Very different situation. You may be a commissioned person. He may be a salaried person. Somebody else might be an hourly plus overtime person. All of these things are different. Is this a rental? Is this a second home? Or are you going to live in the house? These things all affect the interest rate and all affect what programs we need to go with. Remember, everybody's situation is as different as a fingerprint. When we look at the whole situation, you have to understand that all these items represent different risks to the lender. And the higher the risk, the higher the interest rate. The lower the risk, for example, if you put a lot more money down, obviously a lower risk, right? Or if you have a higher FICO score, lower risk, right? Well, we have to look at these things as a whole to help you determine what interest rate you're going to get, and that also helps determine which program is right for you. Okay, now it's time. We're going to get into the nitty-gritty. We're going to get into the comparison. Number one, conventional loan. A conventional loan has a minimum of a 620 FICO score. Credit score, if you're not sure what a FICO score is, that is your mortgage credit score. Now, on an FHA loan, some lenders go as low as a 500. My company goes down to a 550. The truth is, nobody gets approved at 500 anyway. And on a VA loan, we're also looking at the same thing. Many lenders go to 500. Our company goes to 550. Okay, PMI, mortgage insurance, and on FHA, it's called MIP, mortgage insurance premium. Now, on a conventional loan, what happens is it is very, very dependent on what is your credit score. Somebody with a very high credit score might have a very low mortgage insurance payment. But if you have a 620 FICO score, your mortgage insurance payment could be way high. Now on FHA has pretty much standardized, here is your MIP rate. Remember, they're the same thing, they just call them something else. Here's your MIP rate. It doesn't matter if you have a 620, a 580, a 550, or 800 FICO score. Makes no difference, you're going to pay the same rate. On a VA loan, great news. No PMI, no MIP. You got that one. Okay, we're almost halfway through the video, so hit the subscribe button and hit the like button. I appreciate that. Now, if you'd like to comment, I will answer every single question personally. And, of course, you're welcome to share this with anybody you think it's valuable for. Okay, debt ratio. A debt ratio is the percentage of your gross income is before they take taxes out, a percentage of your gross income to your debt. Now, on a conventional loan with a high FICO score, they're going to allow you to go to 50%. That includes your car payment, your credit cards, student loans, alimony, child support, all those kind of things, plus the new house payment. That should be no more than 50%. Now, if you have a lower FICO score, it's probably going to be 45%. That's how conventional works. Now, let's take a look at FHA. With a 580 FICO score or above, here's what's basically going to happen. You're going to probably be approved to a 56.99, let's call it 57%. Again, that includes all your debts plus the house payment as a payment. Lastly, we have a VA loan. Now, a VA loan works very, very different. It looks at how much money is left over after paying all this stuff. And it's called residual income. And everybody, depending on what area of the country you live in and how many people in your family, there's a certain formula for it. Now, if you have 20% more than that, just to give you an example, if it was $1,000, but you have 20% more, $1,200, and a high FICO score, you may even go up to 60 or 65% debt ratio, which is unbelievable, and it's the highest in the whole industry. Interest rate. On a conventional loan, you're often going to hear Fannie Mae, Freddie Mac. Those are conventional loans. On a conventional loan, you are going to have a higher interest rate than either FHA or VA. On an FHA loan, it's lower than conventional and right about the same as VA. They have virtually the same interest rates. Down payment. On a conventional loan, you're usually looking at a 3% down payment. People ask me about a conventional loan. Fannie Mae, Freddie Mac, yes, those are conventional loans. Now, if we look at an FHA loan is going to require a 3.5% down payment as long as your FICO score is 580 or above. If it's 579 or below, it requires a 10% down payment. And of course, for our veterans who honorably served, we thank you. You get a 0% down payment loan. Okay, so we talked about PMI, MIP, mortgage insurance, whatever you want to call it. But there's also something called upfront mortgage insurance. Now, on a conventional loan, there is no upfront mortgage insurance. But those of you with a high FICO score might want to pay some, and they eliminate the monthly PMI payments forever. So that's a big deal, and that's only available on a conventional loan, and it doesn't make sense unless you have a really good FICO score. On an FHA loan, we take the loan amount and multiply it by 1.75%. We have to add that to the loan amount. Simple example, if you have a $100,000 loan, 1.75% is $1,750. We're going to add that so you'd actually be borrowing $101,750 upfront mortgage insurance. On a VA loan, there's a couple of different scenarios here. The first time use of a VA loan, it's 2.15%. So on that same $100,000, it's $2,150 added on. On a second time use, it's 3.3%. So that's $3,300. Now, it doesn't sound like the end of the world, but if you're taking a $400,000 loan and it's the second VA loan, that's 3.3%. That is $13,200. That may make you say, this other loan might be better. Now, lastly, if you're a veteran who happens to be disabled, 10% or more, there is no upfront mortgage fee, there is no VA funding fee. It doesn't exist for you. Okay, seasoning for a bankruptcy. Many Americans for the last few years, they'd had a hard time and they did file a bankruptcy. On a conventional loan, 4 years must have elapsed from the discharge, not from when you started, but from when it was finished before you're allowed to apply for a conventional loan. On an FHA loan, it's only 2 years, and on a VA loan, it's only 2 years. Short sale seasoning. Well, a lot of people ask, what's a short sale? Well, at a time when people owed more than the house was worth, they often went to the bank and said, hey, my house is worth $300, I owe $400, and the bank accepted $300,000. That was called a short sale. Well, if you have a conventional loan, if you want to apply for a conventional loan, it would be 4 years after a short sale. For an FHA loan, it's 3 years must have elapsed from the time of the short sale, and for a VA loan, it's only 2 years. Again, vets win, they earned it. A foreclosure, well, yeah, some people went into really hard times. On a conventional loan, we are looking at 7 years before you can buy a home again. On an FHA loan, it's only 3 years. And for the vets, 2 years from a foreclosure. Okay, time back to work after an extended absence. Well, on a conventional loan, there is actually no real time frame, but the lender will take a look. They just want to make sure it's reasonable and everything is considered as a make-sense situation. You could be back to work for 1 month after 6 months or a year off. On an FHA loan, FHA guidelines require 6 months back to work with pay stubs, proof that you've been back to work for 6 months before they'll accept that income. On a VA loan, it varies per lender. Some lenders will accept right back to work. Some might want 6 months or 3 months. A lot of them will require just get past the probationary period on the job and you're good to go. Occupancy. On a conventional loan, you can buy for a rental. You could buy for a second home if maybe you want to live in the mountains or down by the beach on the weekends, or obviously for an owner-occupied property. For an FHA and VA loan, it is owner-occupied only. Hopefully this video will help you in your decision-making process, which loan is right for you. But if you're still stuck, reach out to me. Call me, text me, email me, and if you want this information for free, go to fireyourlandlord.info, click on the tips page. We have a download button right for you, and of course, I want to help you fire your landlord.